Hello, my name is Taylor Niffen and I'm the controller for Excelsior Capital. Today we're going to discuss the top 5 benefits and tax advantages of investing in commercial real estate. Let's talk about cost segregation studies and the depreciation deductions. When you invest in commercial real estate, we like to utilize tools like cost segregation studies to help speed up the depreciation deductions that you can take in the current year that you make the investment. Cost segregation studies allow you to go into the property, see what can be put into 5-year, 7-year, 15-year buckets instead of depreciating over the normal 39-year time span. You can speed up the depreciation that you take in the current year and lower your taxable income from that property. Let's take a look at all of the deductions that you can take and offset from the taxable income while still receiving positive cash flow. These are things like mortgage interest expense, property management fees, repairs and maintenance, payroll. All of these can be used to offset your taxable income and get it as low as possible while still receiving those monthly distributions. When you receive your distributions, they are normally a return of capital, so you will not owe taxes on that as well. A third tax benefit is something called a 1031 exchange. The IRS came out with this to help encourage real estate investors to put their funds to work for them. When they go to sell one property, they then can invest those funds in another property tax-free. With this process, there are a lot of documents that come into play to make sure that you're eligible, and there's a certain time frame to get everything done. So you will want to make sure that you have a qualified intermediary and a CPA working with you to make sure everything is good to go and you're eligible. This is a huge tax advantage when it comes to deferring your taxes and your deferred capital gains down the road. Another tax advantage comes at the end of life phase when you are planning for your beneficiaries. You can put your assets, your investments into a trust, keep them for your beneficiaries, and when you pass, your beneficiaries will receive a step up in basis equal to fair market value at that date. When that happens, they will not pay tax on the difference in the gain, and that is huge for setting up your family for financial success and wealth down the road. One of the last tax advantages we can discuss today is the difference between the capital gains rate tax and personal income tax. When you go to invest in different situations like IRAs, for example, those funds are distributed back to you, and you will pay your personal income tax rate on that fund that you receive. The max today for that is 37%. Typically, when you invest in the commercial real estate space, the only time you pay taxes is if you have net income during the year on your tax return, or if you go to sell the property. When you sell the property, you will pay what is called capital gains tax instead of your personal income tax rate. The max for that today is 20%. 20% versus 37% is huge savings for some people. So it is always important to think of every situation that can come up and how the end of your life, end of the investment phase looks for you and your family. Feel free to check out our website, excelsiorgp.com, and reach out if you have any questions. As always, any of the tax benefits and advantages that we discussed today can be changed by the IRS, so it is important to look out for any pronouncements as they come out.